Okay, so what kind of situation do we currently have in the market? Now, on US oil, we have a situation in which the market clearly has created this W formation. Now, after a W formation, what do you expect? You expect the market to make a move to the downside. Specifically, you want to see the market go to the downside and test the neckline of this W formation. Now, the neckline of the W formation is obviously the previous resistance now turn support, completion zone of the pattern. And obviously, yes, since the demand of oil is continuing, we want to see proper continuation. But first, we want to see a test of this level to grab is some liquidity. Now, if we go down on the daily time frame, what kind of situation we can see? Now, on the daily, we clearly can see that at the moment, US oil seems to be overextended to the upside, and we can definitely expect a retracement. And that is where things start to get interesting. Why? Because from a daily perspective, here is the structure. We have our downside target. So we have this previous resistance, natural support from a daily perspective, which is here. We have our downside target from a weekly perspective. Now, how you can be approaching this kind of situation. Now, first of all, let's go and have a quick check at what we have from a CAD perspective, because as you know, they correlate quite well. Let's go and see what we have from a CAD perspective if we check the COT data, so the commitment of traders, what hedge funds are doing at the moment on the CAD, which correlates quite well. And you can see that currently we are sitting at minus 33K net positions from the positive 34K that we had here. So from having way more longs than shorts to having way more shorts than longs from an institutional perspective on the CAD, with currently 21K longs and 55K short positions from an institutional perspective on the CAD. That as we just said, basically it does show a correlation with what goes on from a US oil perspective. Therefore, we can definitely expect the correction before more continuation to the upside. Now, the way in which we will be approaching this with students is very simple. At the moment, from a 4-hour perspective, everything is still bullish. Okay, so there is no way to be looking for any shorts at the moment, but things might change in the future depending on how price action will develop from a 4-hour perspective. But there are two things to keep in mind. When we will be following price action, it doesn't really matter how much the market continues to the upside. What we will be doing is waiting from a 4-hour perspective for the market to shift from a bullish market to a bearish market and for the market to provide to us one of our valid entries. As soon as the market will provide to us one of our valid entries with students, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside. But if the market will not provide an entry before the market will test this support, then there is no way to be looking for the short until this support will break to the downside and will be turned resistance. Why? Because you don't want to be shorting at support. You want to find a valid entry before the market hits this support and be risk free on the trade when the market will hit it, so that if the market will bounce away from it instead of basically breaking it to the downside, this will simply be a break-even trade and not a loss. So the short is before this level gets tested. Once this level gets tested, if you're still not in the trade, you have to wait for it to break to the downside from a daily closing perspective before you can be looking for any short. Otherwise, you would be shorting at daily support, which is never a good idea. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.